Hello everyone, welcome back. This is Martin here, and I produce a weekly video for everyone out there. I have some students from right here within the Toronto area. This is where I reside, Toronto, Canada, and I have a lot of students from out of town and around the world as well. So last week, if you can remember, and if you subscribe to my video, I would have told you that we're going to be doing and introducing some big changes for this coming year. In particular, we're going to switch off our regular charts and we're going to be using the Martin Easy Read charts. The Easy Read charts, which I introduced to you last week, are super simple and easy to look at. They're all color coded, and as we look for the trading opportunities this week, okay, we are going to be using these Easy Read charts. If you're wondering who I am, I'm right here looking at you from the top left-hand corner of your screen, and I'm pretty excited because it's a brand new chapter for a lot of students. Right now in the Toronto area, when I introduced the Easy Read charting program, I have approximately 25 students who are currently using them and enrolled in a special course that I designed to go along with the charts. So we're going to look for trading opportunities this coming week from January 15th to the 19th. So before we can get to the actual charts, looking for the trading opportunities for the coming week, it is important for me to tell you that I do have to disclose the risk disclaimer, and that's because I do present different levels on the chart where you could possibly look at getting into trades. I'm going to go over the results from last week just to give you an idea of what you can expect, but it is important that you read this disclaimer here. You can actually put the video on pause, and remember, this video is produced for educational purposes only. I'm not giving you hard concrete ideas, as they may change at any time due to market conditions. So just remember, even though I'm giving you certain price levels, it's up to you to decide what to do with my information, and always remember to review this video at your own risk, especially if you're using real money. Okay, let's move right along. Okay, I just want to mention a couple of things for those people who have not gotten my new charting system just yet, and for those subscribers from around the world. I've not introduced or made available these new charts, but I will within the next few weeks. But I did want to go over a couple of things. Again, the new charting system is called the Easy Read charts, and it addresses a huge problem. What is it? Well, for traders, okay, they focus on what just happened. So when you're looking at a chart, you're looking at, well, what happened, and in the past you can see some good trading entries, right? But when you see what's going on or what has just happened, this causes indecision, hesitation, and or confusion. And what you should be concentrating on instead is what could happen next. So then you can prepare for the next move. So in other words, learn to think ahead. So when you're looking at your charts, you can anticipate the next move instead of thinking about what just happened. Decision making is a process, and this is something that most traders don't understand. You just look at a chart. Decisions have to be made based on a plan, based on a process, okay? That has to be learned before you can trade effectively. Now, traders have a huge disadvantage, and pay attention because this is absolutely true. It was for me, and I'm sure it is for most traders out there, whether you're new or even have been trading for a while and not being successful. What is the problem? Well, the problem is your trading chart in itself, okay? So that's the problem. The chart that you have in front of you is the problem. It does not give you clear and concise information to help you see ahead. Okay, let's take a look. The problem chart. Here's a regular plain chart. I'm sure you've seen this, or if you've opened up MT4, you've put some indicators on. Maybe you haven't. A lot of people look at this and say this is a pure price action chart. However, most traders cannot see the next trading opportunities, right? They don't know what to look for. So trading on these clear, regular charts they're commonly known as price action charts are just as confusing, or can be as confusing, as charts which are cluttered full of indicators. Okay? Now, let's talk about the hard right edge. Ask traders what they fear the most. It's the hard right edge. Okay, that's this section right here. I'm going to use my drawing tool in a second just to give you a better idea of what I'm looking at. The hard right edge can be very troublesome. The last candle always provides a high level of anxiety. Your mind wrestles with the decision to buy or sell, and trading becomes a guessing game. So when you don't see what's to the right side of your screen on your charting MT4 platform here, you basically, you're looking at this and then you're wondering what to do next. Okay, you've seen this, you've seen price going up, right? You've seen that making higher highs, okay? But then all of a sudden you get to this hard right edge and you're not sure of what to do next. Now, take a look closely. We have a big black bearish candle. We have an up candle, okay? And we're going to go to the next slide. What we want to do is understand what we can anticipate when we look at this area. So again, just pay attention right here, okay? Now, this is the exact same chart. The area that you were looking at on the last slide was this area right here. We remember we had a black candle down and an up candle, right? But again, it caused you indecision, and previously I mentioned that price was going up and you were wondering what to do next. So perhaps you were thinking that price was going to continue going up higher, but this candle right there gave you a huge clue that price was going down indeed. So this is what the easy read charts are all about, okay? You can see colors. You can see the candles are colored, and we're going to go over to the real charts right now. I'm going to show you how easy this is, and why I'm now using the easy read charts, and why a lot of the students here in the Toronto area are using them. I've gotten some great feedback, so I'm going to show you how that all works. Okay. I'm going to switch back and forth from the regular charts, which I had been using up to last week and all really for the last year and a half, okay? And I'm going to show you the regular charts and then switch immediately to the easy read charts to show you the difference. But this is from last week. I did not retouch it. I did not move anything. The information is the same as I gave you last week. And last week on the Euro USD, you could have made 42 pips. Okay. I had these levels on the chart, so when price closed here with the black candle, I would have gotten in right there. Made the pips on that candle. That was good for 42 pips. And then I had this level right here. I said to you that you could buy, look at buys above 120, 122. That was good for 79 pips. And the candle, that huge white candle happened on Friday. So Friday produced a lot of big moves for a lot of the major currency pairs. Okay. So let me just take that off. I just want you to understand that. Last week, you could have made off of my recommendations 42 and a further 79 pips. Okay, so let's go to the easy chart. Now, this is the exact same chart, and let's look for clues and see what could possibly happen for this coming week. So for this week, I see that with this huge candle, I mean, this was a huge monster move around 187 pips on Friday. So I would be looking at price actually going higher, I'm just going to move this chart down. Here's my next level, and I did mention this the week or last week. It could go all the way up to about the 2400 level, but if you think that price is going to go higher, then you would look to buy above 122.32 for the upside. Okay, I don't have any recommendation to the downside. These blue lines here, the dashed blue lines, are support area, and you can see here in my easy read charts, I have green over blue. This green matches this green here. We have green and green down below. Take a look at the MACD and the trending indicators. So everything's green, and there may be a pullback, but I see further upside movement. Okay, now British pound USD, same thing. Look at this on Friday. Okay, so my recommendations last week, remember, I left all the information on for you. I want to see you, I want to show you what you could be making if you follow my weekly videos. Okay, so I said last week, if you think price was going down, take a sell below somewhere below 134.88. This black candle went down but did not close below, and you know what? You might have placed a sell stop order here. You would have lost a few pips as the next candle went up. However, placing an order right here, I mentioned look at buys above 136.50. I had a good reason for that, and with that one, you would have made 76 pips to the upside. Okay, now what do I see for this week? I would not really, again, place... I mean, here the best thing to do is wait for a retracement. You want to always wait for the pullback. Do you see that right there? That's a pullback, then you look for a breakout. However, this moved up really, really super high, and the actually what you want to do is place a pending buy stop order, or if you think price is going to go higher, above 137.52. I do believe price is going to go much higher. Eventually, it could go all the way up to 140.63. Okay, you see that? I've got that in as a resistance zone to the upside. Okay, again, take a look. We have green above blue. You're always looking, when you have green above blue, you're looking for buys only. Even when you see price coming back, when it's, as you can see here, you're not looking for sell trades. If you're conservative, you're looking for buy trades. And there are a lot of other entry clues, which are part of the course for the easy read charts. Okay, again, you take a look down below. We have green, and we have a big green candle. However, this went up quite a bit on Friday, so there may be a pullback first. But again, if you think price is going to go higher, look at buys above 137.52. Okay, now we get to Australian USD. Last week, I put these figures on the chart. This is exactly what you saw in my last week's video, and we did not have any trade setups. You can see price, see this red vertical line? These are the 5 candles for last week's trading action. This first black one right here, that is Sunday, Monday. The next one, Tuesday, Wednesday, Thursday, Friday of last week. Price bounced off the 8 EMA and moved higher. So I believe price is going higher. We're in an uptrend, and again, last week right there, last week price did not really go above here or below here. I had these levels already down, so no trading opportunities there for last week on this pair. And for this week, I would be looking at buys above 0.7932. Above 0.7932 if you believe price is going to go higher. If you believe price is going to go lower, and it could, you know, then I've got another level here below 0.7788. These two blue lines are the area that price could eventually go. They act as resistance there. Okay, so that's what we see there. On gold, last week I said for sure gold most likely would be going higher. Take a look at that. It certainly did. It went down first, but then bounced off the 8 and up on Friday. Was a huge day. And for this week, I see price going higher. I've got a level put in here. Really what we're doing is we're just testing. Take a look to the left side. Here is previous resistance, so I see price going higher. Okay, and again, green above blue. The entry, I mean, take a look at this area here. We're looking for a pullback here, and that candle, let me just take that off for a second. The actual entry, based on the easy read charts, would have been this candle right there. Okay, right there. So anyways, that's gold. Let's take a look at the next chart, and New Zealand USD. Okay, really good strong pair. Take a look at this. I mean, this is last week's price action. This is the week before, and I mean, it just broke through this resistance here, and then just kept climbing higher and higher and higher. So last week had a very, very good strong week. We ended with a kind of a bearish doji right there. Okay, that could mean that there could be a bit of a pullback, but I do see price going higher. Okay, I do see price going higher, and I'm going to draw this over right there. So I just drew that in from the left side. So I believe price could go higher, and this is the levels I had last week. Take a look. For the downside, I usually put a price up, like a level higher, a level lower. You can see two boxes here, but in this case I have an arrow here, and this again is from last week's chart. Okay, so I thought last week price was perhaps going to come down to this level and then look at buys above here. That's why I put on the arrow, but in fact price went up. So see, when this candle closed right there, I would have gotten in right there, and this currency would have been good for 70 pips. Okay, at least 70 pips. So the easy read charts, take a look at this, guys. Okay, this is amazing. I mean, there are entry opportunities even before you see this. When you see this, you're already too late. But if you're following the charts, the end of day, okay, there are numerous entries. Okay, and one of them is here. Okay, this candle right there. Okay, so but here, okay, price is now basically it's a runaway freight train. It may come back a bit. I do see price going higher. We are in an uptrend, and how do we know it's an uptrend? Very simple. As soon as you see the green above blue, that's an uptrend. Okay, that's an uptrend. When you see red or pink below blue, that's a downtrend. Okay, so you're looking primarily for sell trades here, looking for buy trades. And so for this week, I believe you know, if you think price is going to go higher, look for buys above 0.7284. If you think price is going to go lower, I've got a tight band here below 0.7218. Okay, so moving right along, and we now get to the US CAD. Last week I had this level on. I thought, and I did specifically say that price was sitting at support. See this black candle here? That was the close of last week, or the previous week, I should say, before I saw the information on the right side of the chart. Okay, and I said, just looking at that we're sitting at support. Price most likely would bounce higher and then down, and look for sells below 123.48. So in fact, price did go up, which was right. Price didn't come down far enough to be to enter into a trade. So there was no trading opportunity last week on this pair. This week, let's take a look. Brand new easy read charts, brand new levels for you. I've got two arrows beside both boxes, so there's no high, no low recommendation. So I believe price is going to go lower, and you can either take a sell trade right now or below 124.50. Okay, or right now your stop loss would be just above the wick of this candle. Okay, I teach you that in the course. Okay, but your stop loss would be right there. Okay. That would be an aggressive stop loss, but I believe price would still come down to at least test the previous low right there. Okay, so or just wait for breakout, wait for price to break below 123.67. Okay, so those, I've got two different levels for you. Depends on your risk trading personality. You decide what you want to do, but I've given you my information on that. Oil. Okay, oil is often yeah, like oil is a commodity, and the Canadian dollar is often strengthened by the how the oil goes. And I mentioned to you last week that I believe oil was, remember, I saw this candle last week. This was the black candle, and I said oil most likely would be going higher, and it did. It actually went up quite a ways. I believe oil could still go up further. I've got this blue line in here on the right side. You can see 66.36. That could be, you know, a possible target, or just below that. But I believe oil is going to go higher. And let's get to the easy read chart. You can see here green candles, green above blue, which means we're looking for buy trades only. I mean, ideally, we would want price to come back to the to this moving average, the 8 moving average or below, and then go higher, giving us the evidence that price will move higher. But right now, you can see it's just very strong, and we have green and green over here. So I believe price is going to go higher. Okay, now U.S. Swiss franc. Let's take a look. Last week I only had one level recommendation, and I said basically sell. You could look at sells below 0.9698, and that would have been good for about 26 pips to the downside. So I didn't have any recommendation the upside, but it did go down below my level here. Okay, and now we get to the easy read charts. Take a look at this, guys. Here is a beautiful signal. You see that one with the red arrow, the red dot. I'm not going to explain everything to you what that means, but that is an actual signal that's as a part of your charting package. The new charts, the new easy read charts, you get all these signals. They do mean something. Okay, and after that we had a nice down candle, and it just went down. But then now we have a pullback, and when you see pink below blue, we're looking for a sell trade, and another opportunity comes after a pullback. These are pullback candles. You know, the pink candles, the pink colors have changed to a dark reddish, or, you know, maroon color. Okay, but we're looking for a breakout. There's the breakout. You would have gotten in right there at that candle, and look at that. You would have made some pretty you would have made some pretty good money based on the fact of having the easy read charts for your benefit. Now for this week, I look at a continuation. I believe price is going to go lower. Take a look at these two blue lines right here in the price. This is support. So I believe price is it has broken out. You see, price is now broken out. I believe it can go down further. It may pull back a bit. Okay, but you could look at, if you believe price is going to go lower, look at sells below 0.9666. Okay, now let's take a look at the next chart, and this is the U.S. Japanese yen. This is exactly what I had for you last week. I did not alter the charts. I've left all the information on, so you can see what happens with my recommendations if you follow them. Okay, last week I saw this white candle. Okay, I've left this red vertical line on. So I saw the white candle, and I basically said, well, we are stuck. Price is kind of stuck within a triangle consolidation, right? And I said, wait for price to either go higher or wait for price to go lower. I had put on these two levels. Price did not go higher above this 113.62. However, price did break out of the triangle consolidation below the 111.96, and that would have been good for First time with this candle, the breakout, that would have been good for 53 pips if you would have stayed in the trade. I probably would have myself, because it not only did this candle break below the gray support area, see this red dashed line? That's the 200 moving average. So I would have stayed in the trade, or maybe closed out half, and left half on the table to see if price would go down further. It did with two more candles, and that would have been good for another 42 pips. Okay, so just to show you what's going on if you follow my trade recommendations. Okay, again, always use risk management. Always, if you're trading with real money, be careful. Now, take a look here. Okay, this is what I see. This is the easy read chart again. We have, you see, we have the pink below the blue. That's forming, so we're looking for sell trades. Okay, and right now, what do we see here? Well, we see, okay, right there, take a look, we're retesting a previous low. So this is a double bottom, okay? Here's a double bottom, and price may indeed go higher toward the 200 and then come back down, okay? So just keep that in mind, okay, that we are sitting at support. But if you believe price is going to go lower, and I believe it will. I mean, my overall idea for this currency pair is I believe it is going to go lower, and I would look at sells below 110.76, okay, to the downside. I don't have any recommendations to the upside, okay? So now we're looking at the euro British pound last week. There are no trading opportunities. I left these on from last week's chart, so you can see price did actually break, and I had this line drawn on. This is a trend line, so take a look. Price broke below the trend line, below the 50 here, and touched the 200 SMA, right? But here, price bounced higher. Price did not go below my recommendation here, and price just kind of touched but did not go higher, so there's no trade opportunity on the euro British pound. Here's the easy read charts, and what I'm saying for this one, we're in a sideways market on this one. Take a look right here at my cursor. The MACD is kind of horizontal, right at the 0, so that's a sideways market. Price is really just going sideways, not going anywhere, okay? And what you want to do is wait. So you're waiting for more evidence, but if you think price is going to go higher, you could look at buys above 0.8934. If you believe price is going to go lower, wait for price to break the 200 here, and then below 0.8790, okay? So that is the euro British pound. Now let's take a look at euro JPY. This one was interesting. Take a look at my recommendations last week. Okay, look at the price action. We had 1, 2, 3 huge massive moves to the downside, and I said for last week, look at, if you think price is going to go higher, look at price above 136.65 for a trade opportunity. However, on the downside, and at a very narrow range there, see, this is a doji with a long wick on top. I said sell below 135.92. Well, guess what? How about this candle right here? That first candle was good. For 61 pips, and then I probably would have placed a pending sell stop. See below the wick of this black candle, right below there, pending sell stop in case price went down further. It actually did. That would have been good for another 65 pips, okay? And I mean, even if you held on, it actually would have made more, but I probably would have stopped trading once price went down here to and hit the support zone right there. Now, that's what I said for last week. For this week, let's take a look. This coming week, for the euro JPY, a huge up candle to the upside, okay? However, this is a huge candle. price often retraces back first, then possibly higher. Here you can see the MACD is not quite closed. Take a look below, not quite closed below above the zero. Okay, we're still pink. We're pink. This is a retracement candle right here. So my recommendation is to wait for further evidence, or if you think price is going to go higher, look at buys above 135.70 to the upside. Okay, and now we move on to last week, the Euro Audi. Let's take a look. Last week I said, and I had these price levels on the chart. Remember, I've left everything on. I've not touched anything, not retouched. If you go back to your video, you can actually find this, that I actually said that, gave you these levels. So I said, if you think price is going to go higher, look at buys above 154.36. If you think price is going to go lower, look at sells below 152.78. And you see with this black candle right here, I would have had a pending sell stop right below that black candle. Okay, and it actually did go down the next day, and that was good for only about 18 pips, but 18 pips is better than nothing. And I probably would not have traded since this candle closed at support there. So I would have only have taken that one trade, but now we've got a huge up candle. So let's take a look what my recommendations are. Let's go to the easy read chart. Take a look. Huge up candle. We have green. That means price most likely will go higher. However, caution, the blue MACD line is below the zero. Okay, this was a huge candle. So in a cautionary way, I'm saying if you think price is going to go higher, look at buys above 154.56. And I do have a price to the downside in case it completely reverses, because we do have red here, or pink. Pink below blue means that we are looking for sell trades. So this could be a counter trend movement, or a movement to the continuation to the upside. Remember, we have green here above blue, so we were in a massive we were in a massive uptrend. This could be just a huge retracement and bouncing right off the 89 EMA, and now price may go higher. But again, I'm saying if you think price is going to go higher, look at buys above 154.56. Okay, so that is that. And then we've got one last pair. What is it? Well, it's the British Pound JPY. Last week, I said, if you think price is going to go higher, look at buys above 153.67. Indeed, price did not go above here, so there were no trading opportunities last week at all. The easy read charts, okay, you can see what's going on. We have green above blue. This is a pullback. When you see candles coming back, and it doesn't matter how far deep it goes into the green or blue, these are pullback candles or retracement candles. So you have to wait for a breakout to the upside above this line here, right? See this line right there? Okay, so there's a breakout candle, but we do take a look below. We don't have green. This is one of these the entries. It's an aggressive entry called a trend continuation, super aggressive entry. If you think price is going to go higher, you can actually place a buy stop order just above the wick of that candle, or wait for another candle that shows green, like the bright green, and hopefully this turns bright green and bright green. So you can wait for a candle that confirms with the bright green colors of the indicators below, and then get in after that, or look at a buy stop order, a pending order above 153.60, and I put that there for a special reason, because this is a pivot swing high, and this is another strategy, another entry strategy that I teach you with the easy read charts. This is a conservative trend continuation entry, or the conservative continuation strategy. Okay, so I would teach you the rules about that if you're interested in the course. Okay, we're coming to the end of our video. Hopefully you enjoyed the contrast between the old charts and the brand new charts. I promise next week's video is going to be shorter. We're only going to be looking at and using the brand new easy read charts, but I wanted to go over the process with you to show you the difference, and hopefully you're learning something. And for further information, now this is important, for further information and for you to receive a free, no obligation 26-page PDF, please contact me. Okay, my name is Martin. That's me right there. Nothing fancy. You have to send me an email, and send me an email message asking for the free information on the new charts, and the email address is mskyj007@gmail.com. So this is the benefit for all these subscribers from around the world, and a lot of the subscribers here in the Toronto area who have not yet seen this information about the easy read charts, or are perhaps wondering what it's all about. But I do have a free pretty large PDF file with a lot of colored pictures and notes and information on the easy read charts. I'd like to give it to you free. There is no obligation. I'm not going to hound you. I'm not going to send you 1,000 emails. Just remember, there's no obligation. You can email me anytime and ask for this free copy. In closing, you can decide to flip the switch from failure to success, and the best way I know is using a charting package that absolutely makes sense. It does give you the clues and the clarity that you need. You are always going to know what the trend direction is, and whether you have momentum to take a trade or to stay out of a trade. That's what the easy read charts are all about. So I'd love to hear from you, even your comments about this video. I know it was long. I promise next week it's going to be a lot shorter. Take care until next week, and we'll talk to you again soon. Bye for now.